Hello traders, Day Trader Matt here at businesswithtrading.com, and today I want to present the market analysis for the week of July 5th, and it's going to be interesting to see what happens. I wanted to leave this on the screen just to show where we have come from. So this was many weeks ago. Price did come up and chop around a little bit. It did hold this area, tried to move up, came down, and then just moved up and just melted up into the weekend. So very, very interesting. As we see it melting up, it did take out that 43.11 area. It didn't quite hit this yellow line at 43.62, 43.63, but it's getting there. 43. It closed at 43.52 on the S&P cash. That's what this chart is, S&P cash. And we're looking for this 43.63 to be hit. We do have these levels above us, but it's just there. We're not going to talk about it. We're just trying to see what price is doing this week. So that's really the goal. What is price doing this week? So let's zoom in here, and this is what we're seeing. First level support, second level support, and this is if price really does break down, which I don't think it's going to do. Maybe later on in the week, I would expect one of these two to hold tomorrow, Wednesday, maybe even Thursday. We don't really have any news. Wednesday, we do have an FOMC meeting. And Thursday and Friday, we do have G20 meetings all day. So this is 43.37 to 43.30. That's what we're going to look for. Second level support would be 43.22 half to 43.20. I would think this would support, because if this does break, it's going to come inside this gap. And this will actually hold basically the bottom of it. The gap closes and then it goes on. So basically our two scenarios that I'm looking for, that I believe have a high probable chance of playing out, is either this first support holds, price goes to a new high, or price comes down, closes the gap, and then takes off to a new high. That's kind of what I'm looking for. Obviously that's short term, because a new high is targeting this yellow line, and from my perspective at the moment, that's what we're looking for. Once that occurs, we can see two scenarios. Either price continues up, maybe it pulls back a little bit, continues up, or you have a larger pullback, and that's when this would come into play. And then obviously that 4,300 level is going to be below us. I drew this down to 43.03 half. 4,300 is a possibility. So, we'll have to really wait and see what actually does play out in the markets, because we don't really have any U.S. news tomorrow. We have ISM services PMI at 10 o'clock. So that's our one big piece of news. We do have 9:45 final services PMI. It's a little bit less paid attention to. People might not even care about it. Wednesday, we have IDP tip economic optimism at 10 o'clock. Again, people don't really pay attention to that. JOLTS job openings, same time. People don't really pay attention. But then 2 o'clock, we do have FOMC meeting minutes. And based on what they say, could affect markets going into Thursday, which G20 meetings start all day Thursday and then all day Friday. So it should be interesting, especially, I've heard Fed, say a couple different things. Some of them are oxymoronic. They don't make any sense. Some of them do. And it is what it is. And that could cause a little bit of confusion in the markets and add some volatility. So we'll see what it can do. It should be really, really interesting to see what happens. With that, if you any questions, we can start a conversation below. Put a comment in the comment box. Also, I would like to point out that in the description, If you do not have Weibo or Robinhood, I do have signups for that. You would get some free stocks. I would get some free stocks. If you don't have an account, you can get free stocks. You don't have to buy anything. So, free is always good. Just wanted to point that out. Anyway, hopefully you enjoyed the market analysis. If you have any questions, comment down below. Have an awesome rest of your day. Have a great trading week, and I'll see you in the markets. Take care. Thank you.